All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. It is Friday, August 18th, 2023. Happy OPEX Day, options expiry day. Glad to have you on board here on the channel. If you haven't already, make sure to click that like button, turn on notifications, subscribe to our channel so you don't miss anything. I'll do the video recapping the week. I'll do that tomorrow. I won't do it today. I'm going to get right at 4. I'm just going to go take a nap. I'm so exhausted. But again, great week so far. We're going to recap it tomorrow. We'll go over the futures. We'll go over the options. We'll go over the playbook for next week as well. But again, let's see what we do on a Friday. Let's go quickly around the horn. Dow futures down about 152. NASDAQ down 119. S&P 4360 down 0.54%. The Russell 1846 down about 0.53%. 10-year Treasury yields 4.274. Pulling back this morning. Crude oil pulling back as well, 79.22, still holding that support from yesterday's lows. Gasoline pulling back, $2.57, down 1%. Gold futures are up slightly, 0.2% at 19.18. Silver futures, 0.11%, 22.69. Copper futures are down 0.12%. Euro dollar is down 16 pips, 108.54. Dollar yen 145.59, down about 27 pips. Pound dollar is down as well, 127.14. Bitcoin fell yesterday. I don't know if you saw that. Word was that SpaceX sold their Bitcoin position. That's what I read online. 26,300. Again, we're still waiting for 35,000 to hit. Other than that, it's been pretty boring. 1679 for Ethereum. That's down about 3.45%. The VIX 1866. Currently still below 20, 103.59 for the dollar index. That is marginally higher this morning. Hong Kong hit a bear market territory overnight. Xpeng or Zpeng, the XPEV, the automaker, the EV, they fell 6%. So anything regarding China's taking a hit, as we know. Evergrande, the real estate company in China, they filed in New York Chapter 15 bankruptcy. Just to give a little context, they also reported or filed for bankruptcy in 2021 offshore. I don't know the details on that. I saw that on CNBC. And again, that was in March 2021. We did okay after that. So in regards to China, I know we've kind of talked about China before on the last clip that we posted from the Morning Note yesterday. A lot of people saying that that's going to spill over into America. Right now, the United States has the lowest employment among the G7 nations. The best GDP growth among the G7 nations. If anything, this is probably going to make the United States a little more, attractive in terms of foreign flows of capital. So I think this is, can't say that this is a great thing that China is hurting. No, I don't think that at all. But even in the 90s, the Japanese had a lost decade, and the United States soared into the dot-com bubble, as we know, at the end of 2001 or end of 2000. So we can't say there's a direct correlation that if China's economy slows, that the United States will slow too. Will you have some kind of pullback? I still think this is the wall of worry. We're spinning the wheel on the things that may or may not happen. But yeah, data has been okay. We're not even in a correction in the S&P. Are we in correction territory for Apple? Yes. We're in a bear market for Tesla. We are now in a bear market for also, I believe, Microsoft as well. So again, pulling back from those earnings highs. Earnings were fine, not great. Kind of hard to justify valuations here, guys. When you can get a 1-year Treasury yield or 1-year Treasury rate or 2-year Treasury note for 5%, it pays to stay in cash. And I talked about that yesterday, meaning looking at here as the, where is it here? I have it here. More cash being piled up, about $40 billion in cash poured into U.S. money market funds in the week through August 16th. Total assets is $5.57 trillion in cash versus $5.53 trillion in the previous week. That's money sitting on the sidelines. We don't know when that will be deployed. The assumption is when money market rates don't pay enough to attract buyers, and they go and actually go into the equity markets or commodities or into other asset classes, maybe crypto, maybe real estate. We don't know. But again, these dynamics do change over time, as we know. And again, I've talked about that we were going to get a pullback a little early in July. I did a clip on it. Here it is. See if I can bring this up here. Oh, here we go. This is the
We also have a
this is from.
yeah,
Okay, so let me see if I can get out of this again. I wanted to play the clip for y'all. Here we go. This is from July 15th.
the downside. So if you need the money today, if you need some cash and you need to take out some profits, today is the day to do so, in my opinion. So I expect the dollar to have a dead cat bounce.
The dollar
Dead
bounced.
cat bounce, guys. It doesn't mean we won't go lower. It just means next week and the week after, the market likes to screw people. Or take a look at it. Replay this video whenever you want. But that's my
And we're playing it now.
I'm not always right. I never claim to always be right.
So again, this was July 15th. I was a tad early, obviously. But again, we talked about the seasonality of August being choppy, low liquidity, not many people wanting to buy. I mean, there's not really a compelling reason to buy unless you're saying to me right now, well, the selling is overdone on a Tesla, which I agree. We're going to take a look at RSIs here in a second. But let's kind of call a spade a spade. Did Tesla fundamentally change their business model that warrants a minus 20% decline in market cap in 6 weeks? No, it's just prices change since there's alternatives to risk-free that are risk-free. So, you could still be in cash, get 5%, which is paying more than a Coca-Cola and a Procter & Gamble, those dividend companies, or you can get into treasuries. We've seen massive flow into treasuries. We just got that info right here from B of A. Treasuries see inflows of 27 straight week, on track for a record inflow year. So people are piling to cash because right now the valuations aren't attractive. I mean, they're still relatively expensive when you compare them to bonds. The problem is that we still have a lot of supply of bonds. So again, yields still need time to pick up. And again, in a short-term aspect, the economy is strong based on GDP and based on unemployment. A lot of markers out there. The market is not just the stock market, but the economy is running hot. Usually, when you have an unemployment at 3.5%, below that, that's a pretty good, economy. Are there risks? There's always risks, anytime. An economy can be too good that it overheats, and that's how you get inflation. And of course, an economy pulls back, that creates deflation, so on and so forth. But the idea is, guys, these are cycles, and that's all. You just have to take advantage of them. I don't have any risk open at this moment. I didn't play anything overnight. I do think that we do end up bouncing today, to be completely honest, even though we're pulling back now. It is OPEX, but we're starting to get a little long in the tooth in terms of put-call ratios and in terms of sentiment. Could we fall lower? Of course. We can always stay oversold, or we know the drill. We've had this discussion before. If you guys remember, in March, we broke a trend line as well from October. And guess what? We chopped around for a bit and we bounced. We broke this trend line again. I just think that we're going to chop around really until the end of August into September. We'll catch some bids and then we'll see where we go from there. But I expected another slam into October. But again, if we get a pop higher, that's where we may just pull back. So in the aggregate, again, in terms of what is main support, 4,200 is still not even a correction territory from the highs. That's still not even a bear market. But the 200-day looms, the 100-day looms on S&P, kind of look at that 43.27 level. That's probably going to be it in terms of it, maybe 4,300. That's only 60 handles from where we are. You're talking about another maybe 1.25% from these levels. Again, we're a little long in the tooth in terms of all this selling. And I think it's not just liquidation. I don't think everyone's saying, get me out at any cost. I don't think we have that kind of panic. What we have is just we don't have any buyers. Pretty simple. Buybacks haven't started yet in terms of the mega cap stocks. What a great time to do so if you're buying back stock, if you're a Palantir, if you're a Google, if you're a Meta, if you're an Apple, a Microsoft, if you are a Berkshire Hathaway, if they want to, I don't know if they buy back stock. If you're an oil company, Chevron, ExxonMobil, what a great time to buy on this dip for your balance sheet. I don't know if they're going to do so. Again, buybacks have not started. Again, that's according to Goldman Sachs. Take a look at the daily. We are now at 31 RSI on S&P. The last time we were this low, guys, was October, September 30th into October. And what happened then? We hit a bottom. So again, guys, we're closer to a bounce than we are to breaking it. That's just the reality. It's a poker game out there, and prices are falling to attract buyers. We're starting to get to that point that maybe we start doing so relatively soon. Look at the NASDAQ 31 reading on RSI. That's the lowest in September and October. Let's take a look at RTY. This is small caps. Again, a 28 reading, lowest since the SVB crisis. And what happens? We kind of chopped around for a bit after that, and then we bounced higher. So again, you can see this triple top formation on which is small caps here. But again, oversold. We have put call ratios in terms of being a little elevated, very elevated. I went ahead and posted that note as well. Let's see it. Here we go. CBOE put buying reached its highest level since the banking pandemic in March. Ratio inverted on this chart. So the last time everyone thought the world was going to end was in March. I think we average one world disaster every 6 months or so. So we're probably due. So here we go. And again, guys, this is just the reality. You just get oversold short term, and then you get a snapback rally, which is going to screw everybody. Kind of the deal. Rinse and repeat. Apple, lowest RSI reading on the daily since September. The same thing, the October lows. Did we get lower on Apple? Yes. We got as low again until 124 in December, and that was the last time as well where we reached oversold, as well as the same in January of 2022. We chopped around and we still fell lower. So again, we're still looking at short-term possibilities. We're looking at this as a trader. In terms of buying Apple, I think 170, 165 gets interesting. Absolutely. For Fortress balance sheet, you're just not going to get a ton of earnings growth, from Apple until we get this super cycle, which is the iPhone 15, and who knows what's going to be reported. So maybe if you guys want to wait for that, the actual iPhone unveiling, and then you can see where you are in terms of your Apple position. But right now, there really isn't any real wanting to buy stocks here. They're not cheap enough yet. You're still getting risk-free returns on cash. And right then, you don't need to buy today. You really don't. I think trading is still the best ROI for now. Look at Microsoft. Again, 36 RSI. So maybe a little more to go, maybe the 300 level. But again, look at the lows that we had. Lowest levels since January of 2023. That was trading at 223 on Microsoft. Will you be playing 0DTE or CRPs or Corps? Okay, no 0DTEs today. No. And the problem I say that is because it's OPEX, obviously. And I don't like 0DTEs. But OPEX, guys, this is where possibly those shorts are going to start covering. So be careful on a snapback rally where you get a little bit of a push higher and maybe we get above 4,400 today. So again, be very careful. We're oversold. Once people start closing those positions, put holders may be holding a bag in a bad way, not in a good way, in terms of holding the bag of premiums. Kind of like the way I'm holding my Exxon premiums, but hey, that happens. Just a heads up too, guys. Netflix puts 400s are in the money. I closed them yesterday. We caught that. 225 puts from earlier this week. That that expires this week. Those are deep in the money. They got as high as 400%, 403 to be exact. You're deep in the money now. You're trading at 219 on a Tesla. So who knows where those 225 puts are at? Get rid of them. Move on with your life. 220 puts on Tesla for next week. They're in the money. If you want to hold, you leave a runner, go for it. Netflix is for next week, the 400s. Again, in the money. If you want to hold on to them, go for it. But the 225 puts, that if you still have those runners, you need to close them today. It needs to be done. If not, you will be exercised. If not, you will lose profits as time goes on. So again, just a heads up. Crude oil. Crude oil hit some support. I tried to short it. Again, you can see the downtrend on crude oil. Double top, looking like at 85, didn't get it. We're still below the 20. I still think 76 is going to come, but I got stopped out here at 81.17, or 81, on really nothing. And again, that was more of a stop hunt to the 20. So next week, I'm going to be seeing if crude maybe does break below 79. We got until 76.61. That's your 200-day. I still think we have a little more room, and we're just going to chop around here. Double until 85 breaks. You really can't go long on crude oil. I tried to play energy, and we just got hit out. This didn't work out. We got that, was that Fitch headline regarding the banks. That kind of started everything, and then you throw in the China stuff overnight, the stimulus stuff, and all the headlines, Evergrande and what have you. And, you throw in the low liquidity, you throw in the choppy seasonality. This is what you get, guys. Just a bunch of nothing. Opportunities. Yes, we've traded puts all week. We've traded puts the last 2 weeks. So, this is nothing new for us. We'll see what we get moving forward. Again, no risk open. I don't have any of those Netflix or Tesla runners personally, but I'll keep a track for you guys. Make sure those 225 calls to close them, please. Don't get exercised. They are deep in the money. All right, guys, we'll leave it there. Have a great rest of your morning. I will see you guys tomorrow for the recap. I'll post that on the YouTube channel tomorrow. So not tonight, it'll be tomorrow. Make sure to turn on notifications so you don't miss it. Have a great rest of your day. I will see you guys tomorrow. Cheers.